Welcome to the Real Estate Experience. I'm your host, Jeff Fulcino. Today, we're diving into everything you need to know about insurance, specifically as it relates to the real estate transactions. And I am super excited to welcome in Steve Monteiro from Fairfield County Bank Insurance Services. He's going to be joining us, and he's going to break down the key things you should understand when buying or selling a home. So with that, let's welcome in Steve, and let's get into it. Well, Steve, thank you for being here. Welcome. To get started, why don't we talk a little bit about you, maybe tell us a little bit about yourself, how you got into the insurance industry, and then we'll go from there.
Sure. Well, first off, thanks for having me, Jeff.
You got it.
Appreciate it. So my story, I left college. I needed a job. Banking seemed like the easiest place to sort of start. So I took on a role there. I was in retail banking for 10 years with a local bank here, People's United Bank. And after so many years, I didn't really know what I wanted to do, if I wanted to stay in banking or leave it. So I actually took an interview with their insurance division. And the reason I did that was just because I felt like I could control my own destiny. Yeah. And so,
Very similar to real estate.
It is very similar to real estate. Working for a corporate, but you sort of control your own destiny, right? Yeah. Very sales oriented. You meet people, you talk to people, do your best to sort of help them out. So I took an interview, they offered me the position, and I've been in insurance the last 7 years.
Awesome. Well, thanks again for being here. So what we're going to do is we're going to talk a little bit about insurance. We're going to break it down, and we're going to make it as simple as possible. The idea here is we're going to give the consumers a baseline of what insurance is, so someone who doesn't know or understand or is just maybe entering in the buying or selling process. Sure. We're going to go through it all. So let's start off maybe with the insurance basics that every homeowner, home buyer should understand. And so with that, can you explain the different types of insurance or insurance policies that's available to someone?
Sure. So insurance is everyone's favorite topic, right? But when it comes to homeowners, let's just use a home for an example. Sure. There's different levels of coverages, right? So when it comes down to a policy or the product itself, you could do very basic, intermediary, and a very comprehensive coverage. All homeowners policies sort of start with two sections, and it's first section and then second section. And the first section really covers the building itself, so the dwelling. So that's coverage A. Mm-hmm. Coverage B would be other structures. So that would be sheds, detached garages, right? You cover your personal belongings, so your personal property. Coverage D would be a loss of use. So if, God forbid, something happens to the house, you need to live somewhere in while the house is being fixed, right? So there's coverage for that. And then the second section is more liability related. Got it. Right? So personal liability and then some medical payments.
Got it. So liability, for those who don't understand, liability would be someone gets hurt on your property or something in that line?
Correct, yeah. So trips and falls, dog bites, anything of
Got it.
Like that.
So with that being said, are there mandatory insurance requirements when it comes to home ownership?
Yeah, so if you have a mortgage, right, your mortgage lender is going to require you to cover the building for its full replacement cost. So, we get the question a lot, but there's a difference between what replacement cost is
and actual value,
right? So what you could get for it on a real estate market and what it costs to rebuild the structure the way it is today could be two different numbers, up or down. Mm-hmm. I've had scenarios where, someone bought a house for $1.5 million, but the rebuild on it was $6 million, right? Because, it had a lot of stone and it just was what it was. Where I had someone else purchase a property for $2 million and the rebuild was only $1 million, just because of its location, how close it was to the water. So it really depends.
Yeah, I've seen it a lot. I've had it happen in Waterbury with a multifamily, where the value of the property was maybe $300,000 or $400,000, but the replacement value was $600,000, $700,000, $800,000.
Well, because carriers, with the way they look at it is, again, generally speaking, they just look at price per square foot in terms of rebuilding it and not necessarily what it sells for.
Got it. So that being said about insurance, what does the location matter, or does it play into premiums at all when you're talking about insurance?
Absolutely. So, someone that's very close to the coast, we see that a lot here, right? Being in Fairfield County, that, someone along the coast is probably going to pay a little more, or they might get surcharged for being so close to the water. Now, there's some carriers, for instance, that they won't take on a risk that's, let's say, half a mile from the coast. They just don't want to deal with it. Now, there's others, again, they'll surcharge you for it. And, the same house being in, upper Fairfield County and lower Fairfield County, it's going to depend really on their location.
So there might be a misconception, like living by the coast and being in a flood zone, but you can be in a flood zone and not be by the coast, correct?
That's right. So, streams, rivers, right? It really depends. So the way they do it is FEMA comes out, they map areas based on past weather events.
Flood zone maps.
Exactly. Yeah. So, and those, they remap them every 5 years. So, today you might not be in one, but tomorrow you can. Right. It all depends. But to answer your question, yes, you can be in a flood zone and not necessarily be near the coast.
Yeah, and you've seen it with some of the natural disasters lately. We had one a month or so ago here where we had tremendous amount of rainfall and flooding.
That's right.
And you're seeing it now across the country with the hurricane that came through. So that being said, we touched about FEMA. Is FEMA the one who draws and outlines what is and what isn't a flood zone, or specific to where your property is located?
It is. Okay. It is. Yep. So again, they remap those every 5 years. So it is always it's always changing. So I would say if you think you're close to one, so my recommendation is always, even if you're not in a flood zone, I would still recommend getting a flood quote, right? Because I think the stat is 1 out of every 4 flood claims are actually not in a flood zone. So it doesn't seem like a lot, but if you look at it from a broad perspective, that's a lot of folks. And then the most recent one here, in Oxford and Southbury, I would say a majority of those folks weren't in a flood zone, and it flooded, right? So unfortunately for them, your typical homeowner's policy is not going to cover it.
So now that we're onto that, so in that specific situation where you're a homeowner, you don't have flood insurance, you may not be in a floodplain, and so you may think that you don't need it. A natural disaster, like we've seen and what has come through here recently, what happens on your side when a policyholder does experience flooding?
Sure. So we were very cognizant of it, and we know it could happen. So our theory, our mindset's always, we talk about it, we do our best to sort of offer it. Obviously, so it's going to come down to the client whether or not, they want to acquire it.
Right.
Again, most people don't like to just pay for insurance as it is, let alone buy a policy that, they're not required to. Mm-hmm. And the likelihood of it happening is slim. But, in a case like what happened in Oxford, or Southbury in that area, the ones that have flood insurance, obviously they're in a good place. But to answer your question about FEMA, it really depends. I think the way it has to be is it has to be declared an emergency by the state. And then FEMA comes in and you could apply for it. Now, will it cover it full replacement cost?
Probably.
Unlikely. Unlikely, unfortunately.
Okay. So let's switch gears and let's talk about claims and coverage.
Sure.
Okay. What are some of the common misconceptions about what home insurance covers?
Sure. So flood, and I hate to keep going on it, but flood is the biggest one.
Yeah.
What people confuse it with is like a water backup, right? So like if you're, let's say you have a septic tank, and it backs up into your house, that would be a covered claim as long as you have, water backup coverage on your policy. Flood, the way they look at flood is just the sudden rise of water that happens to enter your property. That's not going to be covered. The other biggest one I would say is jewelry.
No kidding.
Yeah, so most homeowners policies have some level of jewelry coverage. There'll be a limit. So again, each carrier is a little different, but let's just use an example of, let's say they'll cover up to $10,000 in jewelry, but they'll set a limit per item. Maybe it's $1,500 or $2,000 or $2,500, but it's also subject to a deductible. If you schedule that. So it's a rider that goes along that you could add to your homeowner's policy, that you could schedule your jewelry. So let's say you have an engagement ring, wedding bands, watches. You can schedule those items. It is going to be additional premium, but it won't be subject to a deductible, right? And it'll cover it to its agreed value. So if you have a $20,000 Rolex, it's lost, it's stolen, it would be covered for that full amount.
Oh, okay.
Where if you didn't have it scheduled, it would cover it in that case up to $1,500. Right.
Up to. Okay. So that being said, how or what should homeowners, or how should the homeowner go about filing a claim when something does happen, insurance related, and what type of documentation does a homeowner need in order to, or that's maybe required?
Sure. So with claims, no one wants to be a part of one. But what we always recommend is your first step is to talk to your agent. Because there could be a scenario where, the claim really isn't that expensive. And you have a deductible, and as we all know, claims can negatively affect your premium moving forward. So, for instance, if it's a $2,000 loss and you have a $1,000 deductible, it may or may not, again, it depends. You should have the conversation with your agent, but it may or may not be worth putting in a claim.
Right.
Now, if you have a large claim, again, first step is talk to your agent. He could help facilitate putting the claim in with the carrier. And then at that point, the carrier will talk to the insured and, they'd have a conversation of what happened, what transpired. And then the next step would really be an appraiser comes out, they assess the damage. And then at that point, the carrier may require, quotes or, really the carrier takes it on from that point forward.
So it sounds like the best kind of path forward is really get in touch with your insurance advisor and have a conversation.
That's right.
Yeah. Okay. So maybe discuss some common claims that homeowners have, and then how they're handled by the insurance companies, and then maybe touch on how does a homeowner's claim history affect their rates and policy availability.
Sure. So the biggest claim in homeowners, and I think the stat is 50 or a little over 50%, is water damage.
Yeah.
As you can imagine, once water starts running, it damages everything, right? It just flows downwards and it just destroys everything on its way down. The issue with water is there's a lot of times where you don't even know what's happening, right? It's inside of a wall,
under a floor,
under a sink, and you really don't get to it until there's some damage already being caused, right? Again, with anything else, talk to your agent first, have that conversation, and then reach out to the carrier. Now, in terms of how it affects your premium, most carriers tend to look back 5 years for claims.
Good to know.
3 years for chargeability. So there's some carriers that we work with. We work with over 25 different carriers here in Connecticut. So there's some carriers that they won't take on any insured or any risk that had a water claim within the last 5 years.
Oh, wow.
Some do, some don't, right? So again, 5 year look back, 3 year chargeability in terms of premium.
So I have a feeling where you're going to go with this, and it has to do with water, but what additional riders maybe should homeowners consider to ensure that their house is properly covered?
Yeah, so, obviously water backup's a big one. There's also a few other coverages that I always recommend. There's something called equipment breakdown. So that's, it covers all your mechanicals in the house if something were to happen.
Furnace, AC.
Furnace, AC units, correct. Where typically they probably wouldn't be.
Wouldn't be, yeah.
Another big one, and in my opinion, it's one of the best ones to go with, is something called service line coverage. And service line coverage is, I'm sure we've all received it. You get that letter from the water company or the gas company, and they say, hey, you can insure your water line.
Oh, yeah,
your
from the
gas
street to the
line,
house, right?
Right.
Yeah.
And they, I think the most recent one I saw was almost $100 for just that one line. But you can add it to your homeowner's policy. It's called service line coverage, and it covers any service coming in and out of the house on their ground, be it electrical lines, water,
sewer,
gas, whatever it is. So I like to use the water line as an example.
I've heard horror stories about this.
Yeah, and I'll give you a perfect one. But typically with water, the utility company, the water company, covers all the way up until the meter, right? And then that meter in, really where you have a gap as a homeowner is when it runs through your yard, right? That's where the gap of insurance is. And so I'll give you a quick story. I had a client that purchased the house, and I'll never forget it. I remember the dates and everything. She purchased the house January 21st. On January 31st, she calls me and says that she had a Roto-Rooter out there because her sewer line backed up into her house. So they went through the process. Come to find out, there was a tree root growing through that sewer line. So after they assessed the damage, got pricing from an excavator to sort of repair that, it was over 10 grand. And good for her that she purchased the service line coverage, and she didn't have to, she paid her deductible and she was covered.
Right.
Yeah. Could have been a lot worse.
Yeah, for sure. I've heard it with water lines specifically, where there's a break, like you said, the gap from the street to your house is not covered, didn't have line coverage, and they had $1,000 water bill, and they didn't realize it.
They didn't realize it.
Right, and because you're not billed monthly on water, it's quarterly in some towns.
Sure.
And it can add up very quickly.
That's right.
So let's switch gears to talking about maybe prevention on the homeowner side, okay? Can you maybe outline some preventative measures homeowners can take to lower their risk and potentially reduce their insurance premiums?
Sure. A big one is alarm systems, right? A central station alarm system, like an ADT of some sort.
So when you talk about, didn't mean to cut you off, but when you talk about central, is that something that reports to
That's right.
I mean, not necessarily a ring that you get notified on
That's
your
right.
phone.
You can still get a credit for it, and it'll lower your premium if you have, like a local fire alarm or a burglar alarm. But really where you maximize your credits is if it's central, if it's monitored by a company, right? Either if it goes to the fire department or, a company of some sort. Yep. Other things are just your regular maintenance, I would say, because insurance really covers things that are sudden and accidental. Now, if there's a small leak in your roof, and it's just, it might be here and there, rainstorms, really, you should tend to that. You really should fix that before it becomes a bigger issue. Because there could potentially be a scenario where they could deny your claim, knowing that you knew about it already and it was something that kept happening. That's
Gotcha.
right.
Okay. How important is it for homeowners to, speaking of maintenance, to conduct regular home maintenance, and how could it or does it impact their policy? Yeah,
so, just like anything else, just keeping up with it, making sure it doesn't go bad. And that's with mechanicals, doing your yearly checkups with those, making sure, if you have a sidewalk, making sure those are level and they're not like, because sometimes with water and freezing, they kind of tend to lift. So those are, that might be a liability issue. So it's just being proactive versus reactive when it comes to a lot of things insurance related.
So let's circle back to the alarm stuff and touch a little bit on it. As far as examples of maybe some smart home technology that can help a consumer or a homeowner as far as risk prevention, and maybe speak to how that's beneficial for insurance purposes.
Yeah. So a lot again, water is a big topic in insurance.
So like a water alarm, maybe in a basement.
Yeah. So they have some technology. There's automatic water shutoffs, which is great. It's a couple $100. You add it to your line, your water line, and it's smart in where it learns your habits, right? And it could detect small leaks, how much water is being used, and if it senses that there's something wrong, it'll actually shut off the whole water line, right? So again, it's a preventative thing, but a lot of carriers, especially the high net worth carriers, are requiring those.
Oh, no kidding.
For houses, at a certain limit or above.
Value.
Yeah, that's right.
That makes sense.
So there's service line, there's low temperature monitors that you can acquire. So those are really the bigger ones. And again, alarm systems are always helpful as well.
Okay. So let's transition over to maybe buyers that are now in the market currently, or sellers. So with sellers, should they consider what should they consider regarding homeowners insurance when putting their house on the market, if anything?
Yeah. Well, they definitely should. Because if you're going to put your house on the market, you obviously want people coming in and out of your house, right? You want them walking your property, right? The more people, the better, right?
Right.
So I would say, make sure stairways are clear.
Yep.
Make sure railings are fastened and tight against the wall. Sidewalks.
So liabilities.
Again, liability-related things for sure.
Okay.
For sure.
And then let's talk about buyers. So what, if any, advice would you give to a buyer to ensure that they're really prepared or covered during the home buying process?
Again, step one is talking to an agent. And, everyone's level of risk is different. And really, insurance is there for you to transfer the risk to the carrier. You pay them a premium every year to transfer that risk to them.
I think that's a good way of looking at it, is transferring the risk from the
That's
homeowner
exactly
to the
what it
insurance
is.
company.
You can, again, if you don't have a mortgage, you could go without insurance. I wouldn't recommend it, right? But in essence, all you're really doing is for a premium, you're transferring the risk to the insurance company, right?
Got it.
But I would say as a buyer, number one step, you talk to your agent, check your level of coverage, and then just making sure you're protected, be it your personal property, liability, again, riders you could add on, because again, no one likes to pay for insurance until they need it. Then they're happy they did. So
yes, they are.
So
let's talk about, and we touched on, for someone who's borrowing money from a lender to purchase a home with a mortgage, that there's a requirement for insurance and certain levels of it.
Yep.
But maybe touch on how does a consumer know, homeowner know what is enough? I know it will start with a conversation with you, but outside of the mandatory what's required by the lender, you have a homeowner that comes to you and say, well, is this enough coverage for me? And maybe break that down.
Sure. So, again, carriers, so the way we as agents, or at least I operate, we have this rater that we use, right? So we plug in, and again, I use a general number when I'm quoting folks, right? And I take their square footage, times it by a number, and it typically gives me a rebuild number. Now, each carrier might be a little different. So, really, again, it really comes down to each person's level of risk,
right?
And what they're willing to tolerate. But the biggest things, again, have the conversation with your agent and really discuss, for an example, personal property, right? So we might have the same size house, but maybe I do my shopping at Walmart and you go to Crate and Barrel, right? So those are going to be, granted, they're two sectionals, but maybe one's 1,000 and one's 3,000. Right. You might need more personal property than I do, right? So again, it's just a conversation to have with your agent. Discuss your level of risk, how much you're willing to tolerate, and then just go from there.
Okay. Well, excellent. So let's get you out on this question, and it kind of has to do with the last question. But how often should homeowners review with you or their insurance company and maybe potentially update their policy? And what advice would you have for first-time homebuyers to ensure that their insurance adequately protects their new investment?
Sure. So again, buying a house is probably the biggest investment in someone's life,
most
right?
of the time.
And again, no one likes to pay for insurance. I get it. But for what you pay in terms of a premium and what you're protecting, it's worth it, right? And when it comes down to the buying process, it's such a long process. There's a lot going on in it. So I would say you just have to have a good team, right? You have to have a good realtor. You have to have a good lender. You have to have a good attorney.
Yep.
You have to have a good insurance agent. And for me, again, we represent multiple carriers. Now, should someone look to shop their insurance every year? I would say probably not, unless you have a massive increase.
Gotcha.
Then, of course, you could go to market. But typically, recommend 3 years, 2 to 3
Every 3
years,
years.
4 years. It really depends on your increase.
Yeah.
We're a broker. We represent many carriers. There's captives, and you guys know them all. They're on TV all the time. They can really only offer you their products.
Right.
And
They usually come with a jingle.
That's right. That's right. And with that, the downside to it is that's all they have, right? So if your rates go up 20%, 30%, there's really nowhere else they could put you, right? The only thing they could do is alter coverages,
Right.
maybe increase your deductible, which are negative to you. Where, again, you have a broker who can go to multiple
Shop
markets,
multiple, yeah.
shop them all at the same time, and then you could see sort of where the market is. The last couple years since COVID, the insurance market's been a hard market. Everyone's taking rate, unfortunately. They're just really trying to catch up. These natural disasters that are happening more and more often.
More frequently, yeah.
Yeah, exactly. And they're not small claims. I mean,
Right.
they end up being these large, massive, like
100%.
I could only imagine what's happening in North Carolina right now, what the level of claims that are going to be there, whether they're covered or not.
Insurance companies are not even writing in Florida anymore because
That's right.
of the liability.
Florida's a tough market. So Florida and California have always been the toughest markets, right? California has the wildfires.
Right.
Florida has all the hurricane action.
Right, right.
And, California and Florida have always historically been the toughest two places to do insurance. And there have been a lot of carriers getting out of those markets, unfortunately. It's unfortunate for them, but it's just something they have to deal with.
Yeah.
And even though we're in Connecticut, we feel we kind of
Right.
feel it, because as insurance carriers, they don't look at Jeff by himself or Steve by himself. They look at as a whole. And if they're losing money in California, they have to take rates somewhere else, right?
Somewhere else,
and unfortunately, it affects us here in
Yeah,
Connecticut.
got
So,
it. Well, Steve, thank you for coming. I appreciate the conversation. I hope you have as well. And until next time, we thank you, and we'll see you next time.